stream. Okay, sound check. Looks like this is working. All right, folks. It's Friday. Alright, folks, it's Friday. Yeah, let me just fix my charts, guys. Friday. Let me just fix my charts, guys. Sorry for that. Okay, folks. So it's Friday. It's been, I would say, an exciting week. You know, we actually had a shooting war, and a new one. Okay, not Gaza, not Ukraine and Russia, but we had a new one. We had a shooting war out of, okay, I'm not quite sure if I would call it a shooting war, but we had India and Pakistan shooting at each other last Wednesday. But what I find strange is that it really did not have much of an impact in the market. I mean, normally when you hear that there's war going on, you would expect that gold would rally, but gold has actually pulled back over the last 2 days. And in fact, one of the things that I'm looking at here is that you now have lower highs in your gold chart. So we did not see a new high from the last swing. Now, what else should we be thinking of? Let's take a look at our calendar before we do anything else, guys. So if I look at our calendar, do we have a busy day today? It looks like not much from the US. You've got a lot of Fed officials having engagements, but I don't think that these are market moving engagements. It's not the Fed chairman. These are just members of the Federal Open Market Committee. I would say that they have lesser influence in the market than Powell. What else? We've got the BOE governor speaking in about, I would say, an hour and 50 minutes. What else is there for us? It looks like mostly a blank slate. Okay, so guys, let me start by taking a look at gold, because as we said, we are not quite there as far as a shooting war is concerned. There was an engagement last Wednesday between Pakistan and India. They did shoot at each other. 5 aircraft from India were confirmed, or at least according to the Pakistanis, 5 Indian aircraft were hit, were downed. The US in the Central Intelligence Agency says that 2 Indian aircraft has been shot down. I mean, at least they can confirm 2 out of the 5 that Pakistan is claiming. Now, this is a little interesting because thus far there hasn't really been any incursions. So I wouldn't quite call it a shooting war. The Pakistani aircraft, okay, the Pakistani J-10s, armed with PL-15 long-range missiles from China, stayed in their side of the border. In fact, I think it would be a good idea for us to bring up a map on where all this is happening. Okay, so let me just open a map. Map, India, Pakistan, Kashmir. So guys, this is India, this is Pakistan, and this is where the war is going on, or this is where the shooting's been going on. This area here. Okay, now it is interesting, it is of interest to the markets because both countries are nuclear armed, and the area that's being where all this shooting is happening essentially is part of China's CPEC program. It's CPEC plans. Basically, CPEC is a corridor from China to the coast of Pakistan that's supposed to bypass the sea lanes for, well, for trade purposes, and in case of a shooting war between China and the US, it would have access to Middle East oil, Iranian oil, without passing through choke points in the Malacca Strait. So its importance is that although for now this is a region that's far from the seas, okay, if it were like in the Gulf of Oman, if the shooting were in the Gulf of Oman or somewhere along the shipping routes, then I would have expected that oil right now would have really shot up. Okay, but it's not. It's in a relatively remote area, and the engagement has been India is shooting from its side of the border, Pakistanis shooting from their side of the border, and it's all basically aircraft that's been doing the exchange right now. Last Wednesday, there were 125 aircraft reportedly involved in an hour-long engagement along the border. Now, why did this happen? This was basically an Indian response to a terrorist attack that was committed in Indian territory by Pakistani militants last April, late April, around the 22nd. Basically, some terrorists were able to cross the border and they were going around talking to people, and if those people were found to be non-Muslims, they basically shot those people, and India retaliated for that terrorist attack. For now, as we said, there has been no impact for the financial markets. Normally, you know, if it were a peaceful world right now, if we did not have Gaza going on, if we did not have Russia going on, rather Ukraine going on, I would have said that, okay, gold should really be rallying because that's fresh bad news. That's fresh turmoil. But because it's far from the sea lanes and the world right now is kind of jaded when it comes to military conflict, it has so far, we've seen little impact of this. Of course, if one of these two powers, remember, Pakistan is a nuclear power, India is an even bigger nuclear country. If these two guys, or if these two countries start lobbing nuclear missiles, then that's a different story. Okay, that would likely see a rush for haven assets. All right, so speaking of haven assets, what are they? Haven assets are basically financial instruments that the market runs to whenever there is turmoil. Haven assets include the Japanese yen and the Swiss franc. So if turmoil happens, you would normally expect that currencies like the Japanese yen would strengthen, meaning that chart would be going down. Your Swiss franc would be strengthening, given that Switzerland, of course, is the premier neutral territory. So people tend to think that if there's a shooting war, it's the safest place to put your money in. And of course, historically, traditionally, gold is the haven asset for the market. Okay, throughout history, gold has been considered to be the premier, the top haven asset. So let's take a look at gold. What can we do now? So the war has been so far ignored by the market, but if that exchange in the air is followed by something along the borders, and while it is still far from the sea lanes of communication, the trade lane, the trade lanes in the seas, that is still a big escalation. Okay, aircraft exchanging missiles, not much, but infantry crossing the border would have us thinking more excuse for gold to try to push towards its historical highs. So I guess the big question for me is, well, do we have enough of a story to say that we should think in terms of going there anyway, just to play on the safe side or just to be on the safe side? And to me, it's a question of just how heavy is the market in gold, or have people already booked some of their profits? And if you look at your chart, you had this pullback. We tried another run for historic highs, but we failed. So looking at this pattern here, I would say yes, a pullback has happened. Was that a significant pullback? It sure looks a big one in the charts, but let me draw Fibonacci's favorite tool and see what they say. So this is the last big swing for gold, and guess what? We had a 50 fib retracement already. In fact, that was why we bought from that region. So 50 fib retracement, that sounds like a lot of people who made money before are already out of the market. Okay, so if people who made money before are out of the market, and then there's this potential catalyst for an argument of risk aversion, I tend to think, okay, you know what? This is something that fundamentally right now we should consider going long in. What else do we see in this chart? Coming off 38.2 fib retracement level. The trading days just started. As far as gold charts are concerned, we have a very limited range so far compared to the previous trading days. That right now I'd like to go look at the lower time frames and see whether there is argument that says the time is now for me to go long. So is there argument that says go ahead, buy that already? Let me go intraday. For our picture, look at that long, wow, look at that. Look at that long tail in your 4-hour candle. If we go hourlies, so that long tail actually comes from below 38.2 fib. If I go hourly, nothing too interesting. In fact, I'm looking at this and it seems that Trading Central is still recommending that this is a sell. So what do we have in our chart here, guys? Indecision for the previous hourly candle. We have tested 38.2 fib retracement several times. Okay, we've tested it here yesterday during the late New York, and then we were below it earlier in Asia. We are now back above it. We can even argue that you have a double bottom in the chart there, and you are in the process of triggering a run in that double bottom. But because my previous candle is an indecision candle, okay, this is like a high wave. Okay, you have a big wick, a big tail, relatively small body, so an indecision, a spinning top. I'm not keen about joining this immediately. So what's the plan? Well, if you give me a close above the high of the previous hourly candle, so close above here with this, okay, I don't think we're going to get it because we're only less than a minute away from the close of this candle. But that should be our reference at this point. Give us a bullish candle that closes above this area, above 33.30 on an hourly basis, and that could be our entry. We should then be looking at this level here. You have supports, lows, lows, so that makes it a good resistance region. In fact, last time market was there, we had a rejection. So for now, guys, this is something to watch out for. Give us an hourly close above 1330 and we can argue, hey, go ahead, buy that already. Otherwise, you might want to take a look at 38.2 fib retracement and start looking for hammers here, dragonfly dojis from 32.91, and that can also be considered as your entry. Are we a seller? Right now, I just don't see myself considering the sell side of gold. It's not like it's not like the world has broken into peace. Okay, you still have Gaza, you still have, oh, by the way, we did have some peace a bit. Apparently Donald Trump has signed an agreement with the Houthi rebels that he'll stop attacking them, or at least that's the rumor. I actually haven't seen any confirmation of that, but that's really a minor thing. So for now, guys, no immediate action. Give us a close above 33.30, basically above the high of the spinning top, and that's a bullish argument. That's an excuse to go long. Otherwise, the safer play would be to try to buy this from 38.2 fib retracement with stop losses below the lows of the day. Stop losses below this area. Below this area. It's about 32.80. So we are bullish, guys, but we're not in a position to do anything. How about the sell side? As we said, I do not see enough fundamental argument to say that it's a good idea to sell. Not when we've been in from 50 fib retracement level and we've bounced off it. Not when there are some bad news out there that could trigger a rally in your gold prices. So yeah, let me move on and let me look at something else. All right, guys, so where else can we go? Well, you know what? We are usually a euro trader, so let's take a look at euro. And you know what? I think you have a wedge in your euro. This is the daily charts. You have lower highs, lower lows, consolidation breakout. Technically, do you see or do we see this dropping some more, or are we going to head back up? Let me just close my blinds. All right, let me draw some lines. That's not really a very good looking. Okay. So there's our wedge. Not really very good looking. Hmm. All right, guys. What do we have here? As far as average ranges go, let me put an ATR. Let me just switch the sampling period to 21 days in a month. And we've actually come off substantially in our average ranges. It's now around 108 pips. And for today, how much do we have in range already? We have highs at 1247, lows at 1196. So half of your average daily range has been seen. All right, half of the average daily range. You have a previous breakout point around this area. You have a previous breakout point around here, around 1263. So two scenarios. Are we just pulling back towards the breakout point, and then are we going to get rejected from that? Okay, that's too fat. Are we going to get rejected from there, or are we going back up? Let's find out what is the more compelling scenario here. Let me clean that a bit. What is more compelling? Previously, market consolidated. During a consolidation like this, there is plenty of opportunity for people who have made money before to get out of the market. So I think I can argue that any new trades or any trades that happens might be new. What I'm interested in is how much of a bounce are we seeing in euro already. So let me go intraday, let me go hourly. H4 first. 4-hour charts, ooh, that was nice. 4-hour charts gave us a dragonfly doji, and now we are heading back up. But what I want to know is, can I draw some Fibonacci retracements? And where will those Fibonacci lines be? So here's the downswing. And I am far from getting anywhere near 38.2 fib. But 38.2 fib also roughly corresponds to your previous breakout point at 1261, or rather 1263. So 38.2 fib, 1263, that seems to be, and then you have this line here. You have these lows here. What am I getting at? Well resisted here, and then another layer of resistances. You have 50 fib retracement, and then 61.8 fib. So I tend to think that I would need a catalyst for euro to really push back inside the previous consolidation and stay there. So I'm not going to suggest that we try buying euro now. I know that, yes, we had this nice dragonfly doji from the previous 4-hour candle. Let me take a look at this in the hourly scale. Hourly level, you actually had a nice hammer, and we are slowly heading towards 38.2 fib. But look at your candles, guys. It looks like very slow, deliberate push higher. So I tend to think limited upside, and the best scenario for us is to look for excuses to take the sell side of euro. And those excuses, of course, will be your shooting stars and gravestone doji. Look for these candles at this area. And once you have that, think in terms of testing your lows for the day. Think in terms of big picture. We are trying to continue this pattern of lower highs and lower lows. So no immediate buy for us. Best to look for a good place to sell our euro from. Sell it from about 1287 or 1265. So looking at euro, immediate price action may be sending us higher. Immediate price action may be taking us towards 38.25 or even possibly 50 retracement. But to us, these will be sell areas. These will be potential entry points for shorting the euro. We do not have a catalyst right now for the euro, so if we do short from those levels, I would say limited expectations. Be happy if you get to test the earlier lows. Be happy if you get towards the 1200 area or just below the 1200 area. So yeah, guys, for now, I'm not going to join the buy side because of proximity to resistances. I go look for a rejection from those resistances. Okay, so where else should we go now? It's likely to be a slow day, guys. Like you said, we don't have much in terms of a calendar event. I guess not unless you are a fan of the British pound. Well, I guess it would be better if you're if you trade the British pound. It would be better to wait for the governor to have his say. How about Looney? So, I forgot the exact date, but recently there was this meeting between Mr. Trump and the Canadian PM. And Mark Carney said that while Canada is willing to talk to the US about security cooperation, it's not going to be part of the US as another state. So what do we have for Canada? We have jobs data. The numbers as forecasted are actually mixed. Employment change says that people gained employment, or at least some people managed to find jobs, but the unemployment rate is pushing higher to 6.8%. Let's take a look at our chart. So guys, the numbers as they stand are mixed. Okay, you don't want to have a situation where the unemployment rate is rising but your employment change numbers are dropping. So let's look at the charts. Dollar CAD. Okay, looks like we actually have a breakout in dollar CAD. Let me draw fibs. Here's your downswing. You know, it's very interesting. You've had a very tight range so far for the day after yesterday's breakout. Hmm. Look at that, very perfect fit there. So this actually looks like it's one of those wedge breakouts, but the target seems to have been hit already, or at least we've almost been there. Still, let me go intraday, see what's happening here. For our picture, very indecisive. Hourly level. You know, that could be a head and shoulder in your hourly charts. Okay, so I'm looking at this and I'm thinking this is just waiting for a catalyst. Technically, you do have this head and shoulder forming. Shoulder, head, and then the shoulder here. This will be your neckline. Okay, for the sake of education, if this is indeed the head and shoulder pattern, we're basically looking at this line getting reflected here at the breakout, and whatever that is, that would be the price target for such a breakout when it happens. Okay, so we can't do anything immediately here. With data, I tend to think better to wait for those numbers to come out. It does look like it's bad because the unemployment rate is expected to pick up. And it's bad means that it's unlikely that we will have our head and shoulder really getting triggered. We might just bounce off the neckline instead of seeing a sell-off. So no trades for me on this one. What if we don't even bounce later? What if we don't even complete the shoulder and we just rally from here? We just break higher from here. Can we use a break of the highs for the day as an entry? Well, let's see. Let me delete all of that. Let me put let me just see the ATR on the daily chart. So average daily range is, okay, let me change this. 21-day sampling period. So average daily range is about 81 pips. And we've had how much today? High at 39.42, low at 39.13. So not even half of your average daily range. So guys, if I see a break of the day's high in dollar CAD, then that's an argument for me to expect the upside. So looking at this chart, nothing immediate for us. Our bias is to continue that wedge breakout, see a push through this area, see a push through this 1400, 1390 level, or rather 1.4 area, 1.39 level, 1.3990. See a push through that. Look at it as your immediate objective. So um, I guess this is one of those sessions when there's really nothing good to trade. All right, so yeah, we have about 10 minutes. Let's take a look at crypto because we now have Bitcoin at 100,000 again, and we have Ethereum back above the 2,000 level. In fact, it's working at 22,000 now. So what's going on? What happened? The latest that okay, the only thing that we could really find is that you had Binance buying a crypto exchange, and the rally seems to have originated from that. Alrighty, guys. Any comments, questions? Well, I guess we'll just end things at this point, folks. Quick look at the chart for crypto again. So Bitcoin at 100,000, looking to head towards the previous swing, the previous historical highs. Is it too late to join this? Yeah, if you look at it from a risk reward perspective, you're right here. You're here. Here's your historical high around 110,000. And this is your breakout point at 98. So not exactly the best risk reward ratio to think about. So I guess no immediate buys for us here. What about Ethereum? What about the Ether? Now this is more interesting. Unlike unlike your Bitcoin, which had a small pullback already, or just a small pullback, Ether was just hammered since the December highs. December highs for Ether was around 39, can't be right, around 41 or around 4,102. So 4,102, and where is it right now? It's around 2,300. So that's slightly half of where it was last December. So there's more upside to this. It's a question of where are your resistances, where can this break out, where can this rally stall. We are in the process of taking out some resistances. These highs here. But I think you'll have to wait until you get to this level before things get serious as far as resistances are concerned. That's a previous pullback high, previous consolidation lows around from February. And that's around your 2532 price point. Should we draw Fibonacci retracements? Normally, if I see that my chart has well-defined consolidation areas, well-defined supports, well-defined resistances, I tend not to think in terms of Fibonacci's. Okay, your price action levels are really better, are a better target than relying on Fibonacci's. So folks, we are seeing a bit of a resistance right now in Ethereum. Previous consolidation lows from October last year. But we tend to think a lot more upside once it hits this area, 2532, then I would start thinking what's the risk of profit taking from people. So for now, let's just try to get there. You don't have any immediate signal that says go ahead and jump in. Let me take a look at the hourlies again. There's that gap in your charts. That really tells you how bullish things are at the moment. Unfortunately, I can't really see a new or a nice entry point for Ethereum at this point, guys. Let me just say that we're bullish, but no price point to work on. Okay, so yeah, let's cut things short, guys. So nothing too big to watch out for today. And looks like your euro's stalling already. Can we short euro at this point? Not really. We want to short it from this area, not while it's just stalling. Remember, we want good prices for this, and good price would be coming off this region, coming off 1260s first. Of course, we don't suggest buying it simply because the upside looks limited to me. All right, folks, so I will see you Monday. Wednesday, we're going to have that coding session again. We'll be improving on the EA that we made last Wednesday. Now, the EA that we made last Wednesday, we've proven that it works. It can buy, it can sell, it can close, but it did not prove to be very profitable. In fact, it was, I would say, it was downright losing funds. So we will improve on it. We will iterate, and we will add functions that should help it manage the risk for its open trades. I hope that you'll see or you'll join us when we live stream how to use your AIs to make trading robots. Okay, folks, so thank you for joining and see you on Monday.